Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, the tech sell-off accelerates as investors question valuations in the AI trade. This is MIT flags concerns about enterprise AI adoption. We speak about the return on tech investments, the Bank of America's top technology officer, and what AI-infused gadgets to expect from Made by Google event that kicks off this afternoon. But first, we return to these markets that are having another ugly day. 2 straight days of losses. We are sinking significantly on the NASDAQ 100, and they accelerate off by more than 3 percentage points. Let's get into some of the big point drags. We've got Netflix that's tumbling, but I'm also looking at Palantir that is having its worst 2 days in at least now 4 years. Since 2022, we're seeing it sell off. We're off by 8%. Add that to the 9% we saw sell off yesterday. Those valuations that we were questioning are actually coming down a fair bit. Nvidia is off by 3.3% after yesterday's about 2 or 3% sell off as well. And Intel, it had been outperforming the rest of the market previously, of course, on the hopes of US investment coming from the government and indeed $2 billion coming from SoftBank, but today even it succumbs to some of the anxiety. Let's stick with a sell-off. Let's get Ryan Vlastelica's take, who can really talk us through some of the worries in the market. Ryan, what are we seeing? We're having a questioning of AI valuations. Is it macro concerns? Is it August and the fact that we've got thin liquidity? What is it?
You know, I've heard all of those sort of things. I've heard that this is sort of a seasonal issue that we've seen in past years. So there are some people saying this looks like an attractive time to be buying. The tech trade remains intact. But you do have a number of these names that have really come up this year. You mentioned Palantir, also companies like CoreWeave, NVIDIA, a lot of the Mag 7 names have been very strong performance this year that has brought multiples and valuations to levels that are really kind of getting tougher to justify. We are out of the earnings season. We're in sort of a slow news environment right now. And it just seems like when you've seen moves like this, some kind of consolidation or pullback is going to be expected. And when you have such high momentum names like Palantir, like CoreWeave, you start to see some of the most aggressive selling in names like that first.
Palantir, as we said, worst 2 day sell-off in 3 years, currently trading at 180 times future profit. But that's down from 240 times future profits that it was previously trading at about 2 days ago. Ryan, it's interesting. You'd been digging into some of the valuations of the high flyers that actually had only recently caught a bid. I think of Intel and the fact that they'd added, $24 billion in market capitalization in this month alone. That's coming down today, but it did show this desire to be getting into some AI-related names.
Yeah, so Intel's a bit of a special case. You mentioned how there was reports of government wanting to take a stake. You had SoftBank coming out and looking to invest about $2 billion into the company. You did see a pull up there. I think the stock rose 20 to 30%, something like that. However, this is the third 20% rally that Intel has seen this year. We did see those previous rallies fade pretty quickly. There still continues to be a lot of questions and concerns about whether Intel will be able to reestablish itself as a major player within chip manufacturing, but also chip design. It is very much behind NVIDIA and AMD and AI chips. It's behind TSMC on the manufacturing side. So there's still a lot of questions there. It's not necessarily surprising to see the stock pull back after that initial excitement, especially since, as we reported yesterday, the multiple got to levels last seen in the dot-com era.
And it's interesting that SoftBank's pulling back as well. It's sunk about 7% in Asia trade. We have seen a bit of a global anxiety around tech. Baidu was lower as well after its results. Tell us a little bit, though, about the next set of catalysts, because at the moment we have been treading water more around the macro concerns. We do get NVIDIA's results next week. That could be a key catalyst.
Yeah, absolutely. I think a lot of people are waiting to see what is said there. I think there's a lot of optimism about this report because we did just come out of an earnings season where all of its major customers, Microsoft, Meta, Alphabet, Amazon, they all really affirmed their plans to continue investing aggressively in AI, which is obviously going to help NVIDIA kind of first and foremost among the infrastructure plays. Now, if they say anything about the outlook weakening or there's further skepticism about China or so on and so forth, there is room for us to continue moving down just because, like I said, we have seen really strong gains in some of these stocks so far this year. There is room for them to move down. Now, if NVIDIA is very strong, it's very possible possible that that is the kind of signal people will use to, buy this dip and maybe move back into tech.
Brad Plastelika, as always, we thank you. Let's get you some breaking news now, actually revolving around a big tech player and China. Microsoft is on the move. The company says it has curtailed Chinese companies' access to advanced notifications about cybersecurity vulnerabilities in its own technology. That, of course, is after investigating whether a leak led to a series of hacks exploiting flaws in its SharePoint software. Now, the announcement from Microsoft follows a campaign of cyber attacks that Microsoft blamed on state-sponsored hackers in China who targeted security weaknesses in its SharePoint servers. We're off by just 0.7%. It's not as bad as the rest of the market, but still trading lower. Let's get you full context on this market. Anna Rathbun is with us, CEO, founder of wealth management firm Grenadilla Advisory. Anna, what a difference a couple of days makes. What do you make about this sudden AI valuation anxiety?
Yeah, good morning. In some ways, it's expected, right? You can't expect everything to go up all the time. I do think that there is something to be said about the month of August being, special in a seasonal way. But the other thing is there are people who are taking gains. There's also, when there's fear that comes into the markets, usually the ones that are casualties first are the ones with the highest valuations, and those are in the big tech names. So, this I think is temporary. I don't think this is a start of anything that will become a trend. But certainly, it's part of being an investor.
Part of being an investor, Anna, how do you protect what have been profits made? Is this actually just a profit-taking moment and people are locking in really big wins that they've seen run up this summer?
It would be prudent to certainly lock in some of those gains, but I don't think you can be out of it because AI is where all the growth and investment is going into it. You saw, about a month ago, Trump administration coming out and basically pledging its support behind AI and data centers and all the infrastructure and hardware that's a part of it. And certainly, I think this move into taking an equity stake in Intel is a part of that story and also part of the story of bringing manufacturing back into the United States. So there's a lot of momentum here. Now, government being a part of a private company is a double-edged sword. But if we're to take a look at the upside, there's a lot of support around AI and tech. So I don't think investors can really ignore it.
Anna, to that point, when you get Intel suddenly, prior to today, running up, valuation soared to, the most expensive it's been since the dot-com era, should you be putting that much credence in government backing and in the ability for them to secure long-term demand for future chip innovations?
Yeah, I don't think this is just about the government because we also had SoftBank coming in and committing to, or talking about committing $2 billion in terms of investment. So I don't think this is the end of it. And also, I know the Trump administration said that they're not going to be taking a governance role in this, but if you're the U.S. government and you're one of the largest shareholders, you can definitely influence through tweet. And if the government has skin in the game, is it really going to sit at the sidelines and look at Intel maybe not following through with the Ohio foundry? I could see a scenario. This is speculation, but I could see a scenario in which the government can help to garner those customers for those chips. I don't think this is we'll take an equity stake and be done with it. I don't think that's that.
It's interesting. SoftBank came on board, many feeling that with the help of ARM, we could start to see real competition, maybe even to NVIDIA in the longer term, had been some of the analysis written, Anna. Let's think about NVIDIA for a moment. It's down over the last couple of days. We anticipate its earnings. Look, more broadly, are the tech tailwinds, the AI trade, still on?
I think it's still on. Meta just came out, and I think there are issues there with the management and the team structure and everything. And I don't think it's necessarily good news for Meta. But this hiring spree
go into that. Sorry, why is the restructuring of the AI department, Alexander Wang leading when it comes to LLMs and the breakdown of these 4 different areas of focus? Why is that perhaps not good news for Meta?
Well, it's not good news in a sense that in the last 2 months, we've seen a lot of restructuring. This is the type of stuff that makes investors nervous in terms of effective management. You can hire the smartest people at high price tag and put them in a room. If they can't work together and if they can't produce a product, then you don't really have anything. You don't have an ROI on that, right? So this is a type of stuff that makes investors nervous. So I think that's a very meta-specific problem.
I love that you have that idea of ROI, because that is what many are looking at this MIT report about at the moment. We're blaming, and it's in an unnuanced manner, this particular report out of MIT saying, look, 95% of the work done by companies to integrate AI hasn't returned money or productivity. What did you make of the report, Anna?
Well, I mean, what would you expect? I mean, this is such new technology. I think you have to expect a lot of these efforts to fail in the beginning. You have to have a lot of failures before you can have the wins. That's why I look at the AI efforts by these Mag 7 names as incubation. I mean, to look at ROI and expect ROI within a year or two of them actually really embarking and investing in it, I think it's too soon. I think this is more of a long-term play. And so that report was sort of expected in my mind.
Anna Rathbun, it's great to have you back on. Thank you, Granendala Advisory. Now, coming up, I'm pleased to say we're going to be digging into the return on AI investment with Hari Gopal-Krishnan. He is the Chief Technology and Information Officer for Bank of America, all about where they've been focusing in on artificial intelligence and tech more broadly. Let's get tech more broadly for a moment, because we are in the eye of the storm of a bit of a sell-off today. We're off by 1.5% on the NASDAQ 100. Coming off of our lows, the stocks, though, semiconductor index off by 2.5%, Nvidia off by 2.8%, Palantir having its worst couple of days in 3 years. This is Bloomberg Tech. Oracle's cloud infrastructure unit, well, it's helped to propel CEO Larry Ellison to become the second richest person in the world at one point. With the AI boom, the company saw huge demand for its computing and storage over the internet, gaining foothold among key customers, TikTok, OpenAI. For more, Bloomberg's Brody Ford, who covers Oracle, joins us now. And for many a point in history, Oracle almost pushed against this trend, and now they are well and truly into it.
2008, Larry Ellison gave a speech people love citing. He said, this cloud is gibberish. And I mean, they were making so much money and continue on, old school database software. But in the last couple of years, they've managed to really reinvent themselves from a legacy company to one that's at the center of the AI boom. And yeah, I mean, there's no better example than their work with OpenAI and Stargate, right? We have the details that on one new data center in West Texas, they're going to be spending over $1 billion per year just to power the thing with gas. I mean, that's before construction. That's before all the chips. The scale of the cloud build-out happening for AI right now is just, it's a comical scale that we haven't seen before, and Oracle has found itself at the center of it.
Let's just talk about who's driven this, because the CEO is, of course, Safra Catz. How much has she been the pinpointing of this growth area? How much has Larry Ellison really been playing a key role? What do you make of the internal workings of this business?
We spoke with a lot of folks that are close to this business, and, the CEO, everybody wants money from you. And for a long time, Safra said, no, we are not giving you all the money that it takes to build these data centers, right? I mean, she was skeptical of the business for a long time. And then these big deals started hitting. I mean, TikTok around 2022 was making so much money that it was bigger than the entire rest of Oracle's cloud all put together. And so she saw deals like that. She saw deals like OpenAI, and that's when it became clear that this isn't just part of Oracle's business. This is going to be the business. Wall Street expects that by 2029, that cloud infra will actually be the largest share of Oracle's revenue. And so this is a true reinvention of the company for good and potentially for bad, right? I mean, it's a much lower margin business. There's more risk to it, but clearly for now, the sentiment is good and something is working well for them.
And the breadth of customer here, Brody, because we think of TikTok and we know they're a key infrastructure player for them. We know the relationship with Stargate and therefore OpenAI, but how broad is this getting?
It is a bit of a whale business right now. It's a bit concentrated, right? The majority of their backlog is AI deals, largely training. There are questions out there around how long does the training boom last? What are the margins of it? It's a very impressive customer list for sure, right? I mean, as you said, we got OpenAI, we got TikTok, we got Elon Musk's XAI, we have Meta, we have a kind of cadre of, all the AI names that we all know. And so they've signed all the right people, but the real test of them going forward is, can you sell these folks more than just GPUs?
And what can they do with them? Bloomberg's Brody Ford.
Thank
Fantastic to have you. Thank you. Let's talk about what you can do with all of this GPU, this compute, and how it ultimately brings productivity. A study from MIT saying that actually, despite the billions enterprises have spent on generative AI, perhaps only 95% of organizations, well, they say they're actually getting a zero return thus far. Only 5% have got any return. Is this really true? Hari Gopalkrishnan is with us. He is the new Chief Technology and Information Officer over at Bank of America, where he leads the bank's global technology approach. You've been at Bank of America for 14 years, but you've very recently taken on this real global helm job. And there is more nuance to that MIT report than the market is giving credence to. Basically, it's saying, look, if you just try to make it up and perhaps build some ChatGPT-like products yourself, it didn't always work. But what have you been doing internally to make things work for Bank of America?
Yeah, great. Thanks for having me. And look, we get to serve 70 million clients every single day. And AI is not new to us. It's been part of our journey. So if I could offer you some sound bites of what we've seen in the last 5 years. 99% of our customers and clients today interact with us digitally, fully self-serviced.
99%?
99% of our interactions in the consumer business are self-service digital. We have 65% of our account opening is digitally done. 10 years ago, 0%. Yeah. Our client satisfaction number, which we care a lot about, has gone from the high 70s to 89.1, and yes, we're counting. And so you think about it, better client satisfaction, shift to more self-service channels, and more automation always yields great results. And AI has been part of that journey for us.
And I think of as the client, the customer perspective is Erica.
Yeah.
But your client and your other stakeholders, like your own employee base, how have they been adopting generative AI? How have they been using assistants?
Yeah, and maybe if you just rewind the clock a bit, right? Our first journey into AI started with things like fraud models and fraud algorithms. We have 1,400 plus patents and 250 models in production with things like AI models. And what we realized 7-8 years ago is humans wanted to interact with machines in a more humanistic fashion. And long before the large language models came along, we thought about things like Erica, which allows a customer to simply say a few words and for us to figure out what they want rather than them trying to figure out what our systems actually did. And that's where we've now seen significant adoption. So this morning we had a press release that we now have 3 billion transactions that have been conducted on Erica. And that continues to grow at an exponential pace. So that's our clients and customers saying, we actually like to engage with you in this way.
Yeah.
When you then pivot to our employee base, they're like, well, why can't we use the same capabilities? So we've taken this platform and broadened its use. So today, a high net worth advisor can actually look to Erica to say, look, I need to hear about some complex trust policy in Delaware. Can you summarize it for me and tell me how I should talk to the client about it? And one of the more recent implementation has been is, I'm about to meet a client. How do I prepare for that meeting? Before, a junior banker would take days to prepare a dossier for that. Now we can actually use generative AI models to create the first version of a draft that saves hours and minutes, if not time, which then drops to the bottom line.
Hari, I know in many ways this is your secret sauce, but I'm reading that you've got, what, 7,800 patents of your own. How much are you having to depend on purpose-built generative AI? How much are you looking to an open AI for the enterprise offering, or are you going to build it yourselves?
Well, I think we have a multi-level approach to this, right? We're not, we have enough reality to know that we're not going to go build foundation models.
Yeah.
We want to build upon all the investments that are happening in the industry. But the reason they're called foundation models is they let you do a lot of things on top of them. So we have a level of the stack where we absolutely will embrace commodity.
Which ones, out of interest?
Well, I think a little bit of everything, right? Okay. We are looking at it, and we intentionally want to be model agnostic, right? We intentionally do not want to be wedded to any one single solution. But then built upon it, when it comes to our complex workflows, when you think about our business processes, if it was just as simple as buy something off the shelf, every one of us would be done. The reality is you have to take these models in, and back to your productivity question, the way you unleash productivity is applying these to your business process. Understanding how your current process works. Don't just try to replicate it. Figure out where you can eliminate parts of it, simplify it, and then use AI to go after it. And what we've seen is it's yielded tremendous results for us.
I mean, you said, and we're counting. How are you measuring that productivity gain, apart from the sheer scale of interactions and numbers that you're seeing?
Yeah, I'll give you an example of it, right? We now have 17,000 developers in my own team that use coding agents to help their day-to-day activities. Within that, we actually measure things like cost per story point, defect density. There's a set of metrics, productivity metrics that we look at, and we look at it before and after. We expect to do similar things on a business process by business process basis to actually understand the metrics when we went into the problem, how we deploy these capabilities, because they're not cheap. So we need to make sure there's an ROI component to it. But coming out of it, be able to see what comes out and fail fast if it seems like a given process doesn't lend itself appropriately.
So I go to the sensitive question of those employees that are embracing these coding agents.
Yeah.
Do you hire fewer of them? How are they feeling about being augmented or replaced?
Well, I would say it actually allows us to get to a backlog we could never get to. There's always more work than you can get to. There's always things that you could modernize. There's always more things to do. And I actually tell you that our first reaction from our teammates has been this frees them to do more innovative work rather than the mundane work that was consuming their time and resources. And I think we're going to see that pattern play itself out over time.
Certainly. Only, a few weeks into the leading job. It's wonderful to speak with you, Hari. Hari Gopal-Krishnan, he's the Chief Technology and Information Officer over at Bank of America. Time now for Talking Tech. And first up, Xiaomi says it's looking to sell its first EVs in Europe by 2027, taking on the likes of Tesla and BYD. Now, the company announced its strategy after posting a 31% rise in quarterly revenue, boosted by the launch of its second EV. Now, according to the Xiaomi president, the company is doing research and preparation. There's no specific product plan yet. Plus, shares of Baidu, well, they're lower today. The company posting second quarter revenue that slipped slightly as it faces an economic downturn in China. Now, AI rivals and difficulties in net growth areas in particular. China's internet search is looking to Gen AI to drive future growth, but is struggling as open source models like DeepSeek gain traction. And startup Game Science has unveiled it's working on a successor to one of last year's best-selling RPG titles. Now, at Gamescom conference, it was over in Germany, the company showed off a teaser trailer to Black Myth: Shangqi, a sequel to 2024's Black Myth: Wukong. Now, according to Game Science back at Tencent, the project is, quote, little more than an empty folder at its current stage. Coming up, Meta making those restructuring moves of its AI group. They'll have the details next. But first, let's check in on these markets. We are down, and we're down significantly. The Nasdaq 100 really accelerating yesterday's losses. We bounced off our lows, but still, we're seeing some of the worst sell-off that we've seen in a few months. We're also seeing names like Palantir really eroding some of that valuation that we've seen, having its worst couple of days in 3 years. Other names such as Apple and contributing to the points perspective. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Let's take a look at these markets. We're in sell-off mode. We are bouncing off our lows. Nevertheless, we're up by 2.4% in the last 2 days. We're sell-off since about April, in fact. We have some deep anxiety surrounding valuations, particularly in the AI trade, whether it's macro concerns as we anticipate Jay Powell and an awful lot of Fed talk, what rates mean, but also more broadly what these valuations have got to extreme levels really mean when you've got perhaps enterprise not fully adopting in the productivity means that some anticipated, that MIT research report causing some gyrations. Let's move on to the individual movers that we keep an eye on. Look, I'm off by overall in the last few days, well, 5.5% for Palantir, but worst couple of days sell-off in a few years. Intel is off by more than 6%, wiping out a lot of yesterday's gains after we were enthusiasm around SoftBank investing in this company and indeed talk of the US government taking at least a 10% stake. But we pull back on Intel as people really lock in profits on Meta as well. We're off by 1.4%. It's down for 3 straight trading days, having lost 5.6% in the course of those 3 days. Let's just stick with Meta more broadly, and the company announcing yesterday yet another restructuring of its AI group pursuing superintelligence. Now, it will be splitting its AI team into 4 distinct teams, a move the company says will allow it to better capitalize on its recently acquired talent. Bloomberg's tech reporter Riley Griffin is here to break it all down. You're in San Francisco, really digesting what seems to be a focus on LLMs, still on the frontier research, but then there's the application of this research and the infrastructure, of course.
No doubt. Yesterday, we were able to obtain a memo that was shared by Alexander Wang, the new chief of Meta Superintelligence Labs. And he's really laying out the new structure for this organization after weeks and weeks of an incredible effort to hire talent. As you might remember, Caroline, this is hundreds of millions of dollars, sometimes nearing $1 billion in total compensation for individual AI researchers. And now they are finding their home within Meta, within these 4 teams.
Yeah, and the home, how are you seeing the, perhaps what some have reported behind the scenes of some jostling or discomfort with what had been suddenly incredibly expensive talent coming in and a reorientation of where the focus is? Does this help better align that talent and actually push forward in, ultimately, is it open large language models, for example? Are they going to delve into closed ones potentially?
That is a burning question for all of us. What we do know is that one team will continue to be dedicated to large language models, the Llama product that underpins Meta's AI efforts broadly. And the one team that I really am keeping an eye on is the infrastructure team. Mark Zuckerberg has pledged to spend hundreds of billions of dollars specifically on AI infrastructure. And now we are seeing talent from within the company go and lead that specific effort. We expect more capital to be deployed there this year and then certainly next.
Some great reporting, Riley Griffin. We so appreciate it. Let's get some of the investor and analysis take now. Rohit Kulkarni is with us, Managing Director and Senior Analyst covering Internet and Capital Markets Research at Roth Capital Partners. And that commitment to infrastructure that Riley articulates there, that money, is it proving out?
Hey, thanks for having me. I think so far, what we have seen looking backwards, last 12, perhaps 15 months, Meta is probably the best poster child in providing kind of quantifiable returns on investment in AI infrastructure. By that, what I mean is the company has demonstrated accelerating revenues. The company has demonstrated upside to industry growth and a lot of other bells and whistles around AI investment. So looking backwards, yes, definitely. AI is the poster child of showing return on investment. Looking forward, that's the question mark in the stock today.
Okay, so they've been able to make it work for advertising in the business model. But now for superintelligence and the race to be won, what business model does that align itself with for Meta? How much are we going to see generative AI affect the way in which we interact and communicate?
I believe the problems that Meta is trying to solve using AI and using superintelligence are just compounding with the data that they're collecting and the possible business models that they are exploring. Remember, they have invested a lot of money in the augmented reality, virtual reality glasses. They have been working on that over the last 4 years. There has been a reset in that, and now probably we are not now looking at 2027 for the actual launch. So there is a timetable to build AI within those glasses. I believe that's going to take up a lot of money. And second, integrating the 3 apps that they have. Those are the 3 largest mobile apps in the world with billions of people using on a daily basis. To make those apps super intelligent and to make them extremely sticky is probably a monumental investment opportunity for them. So these two are orthogonal investment opportunities, but I think both are probably going to be something that Zuckerberg is going to be fully invested in.
At $1.87 trillion, is that a full valuation for this full investment theme that you have, Rohit?
I believe the layers unpacking in the future, it's just going to be something that we are going to be excited about. I feel we have still not yet scratched the surface of the potential of Gen AI on a very large multidimensional platform like Meta. And I feel Zuckerberg has the founder whip, if you feel. He's investing behind this as if it's an existential, once-in-a-lifetime opportunity, even bigger than when iPhone was launched. So I feel the excitement and the kind of attitude that they can disrupt the apple cart while redoing something new is something that investors are willing to be patient around on Meta stock, and so are we.
You're patient, you still got a buy rating. Compare and contrast to some of the other key companies that you do analyze. When I'm thinking that you're looking at Alphabet and Amazon, are they as bigger winners? Have they been as bigger winners in the capex they've already spent? And do they have as good a road map as you currently articulate for Meta?
So far, I think Meta is the clear winner. Amazon is so far probably a number 3, and Google is a number 2 player, number 2 winner as far as demonstrating returns on Gen AI investments. Having said that, I think the complex problems that each of these very large, massive companies are solving or trying to solve using AI are essentially compounding with every day. And that is leading to more investment and more investment needed to solve those problems. Think of the multidimensional e-commerce, cloud, advertising, Prime Video, same-day delivery. All of these elements can be optimized using AI. And at any given time, probably Amazon is focused on maybe one or two of those. So I feel kind of over the longer arc, the bigger winner is probably going to be a company like Amazon, given the surface area of improvement they have, the potential. But in the near term, probably a one-trick pony like Facebook has executed better in the last 18 months, and they are demonstrating better returns today.
I hate to talk about the near term because I know you're a man who likes to give longer term projections and price targets. But when you're seeing a sell-off like we've had after the last couple of days, a lot of it tied up with worries about ROI and the report coming out of MIT, the Gen AI divide and the state of AI in business. Do you give credence to that? Do you think there's a lack of nuance, or do you think actually we should be worried about how much we're investing in the returns on it?
I think there are two ways to interpret MIT and just the overall questions that are being raised. That, hey, by the way, we applied Gen AI algorithms, LLMs, we invested so much, but we are not getting the returns as much as we wanted. I think the way these large companies are trying to solve really large problems, the efficiency gains that they will provide over the next 12 months are something that we are very confident on. Whether that translates into revenue uplift, that remains to be seen. Only a company like Meta has demonstrated that. Other guys are kind of TBD. That's why, from an AI winner standpoint, Meta is the one to buy on this weakness today.
Rohit Kulkarni, Managing Director and Senior Analyst at Growth Capital Partners. It's great to catch up with you. This is Bloomberg Tech, and you're looking at a live shot of the principal room. Bloomberg is live at Jackson Hole this week. Tune in for continuing coverage leading up to a special episode of Bloomberg Surveillance on Friday. This is Bloomberg. Elise AI, which automates complex healthcare housing systems, has just announced a $250 million Series E round, led by Andreessen Horowitz. The startup, which was founded back in 2017, offers conversational AI, a platform for users. And I'm pleased to say that the CEO and founder, Elise AI, Mina Song, is here with me. You're based in New York, and just how was it raising these funds? How quickly are you able to raise such an enormous amount of money?
Thank you for having me. It was pretty quick, actually, to raise the round of funding. I think investors are incredibly excited about investing in vertical AI, which is AI that solves specific problems for specific industries, which is exactly what we do, particularly focused in the housing and healthcare industries.
And why those particular industries? Was it just the pain points were just so obvious and glaring to you?
I think so. It's pretty obvious to all of us how inefficient and how limited the technology is when we interact with these industries. But the core mission of the company has always been to develop advanced technology for industries that serve fundamental human needs. So housing and healthcare are some of the most important decisions we make and the important, most basic needs that we have as humans.
So the way in which the business works is you're selling your conversational AI in a B2B manner, but then it's me that ends up experiencing it as a consumer. How have you seen healthcare institutions, housing institutions' willingness to purchase these sorts of products thus far?
Yeah, they're extremely excited to use it. So we serve, on the housing side, 1 in every 8 apartments in the US today are using our AI software. And where we're using AI to automate manual processes to make operations more efficient and to make them more cost effective. And these inefficiencies really affect all of us. When an industry is inefficient, then that drives up costs for owners, which ultimately trickles down to renters, which is really important and really affects all of our lives. So there's a lot of excitement about AI.
Okay, and so with the money, you do what?
A significant amount of the funds are going to be going to expanding our teams. So a lot of engineering team members, product team members, research, operations, and more. We're expanding our offices in New York City, San Francisco, Chicago, and Boston. So we're looking for people who want to have real-world impact and solve really important problems that impact millions of people's lives.
We've talked a lot about talent wars and how expensive certain researchers have become. Is it the mission that therefore attracts them, or have you had to up the paycheck significantly and indeed the reward of equity?
Absolutely the mission. I think people who want to apply these great advancements in artificial intelligence, but want to see that that has real-world impact and that it can affect all of us, is what attracts people to working at Elise AI.
How do you tend to offer when you think about packages? Are people coming on board wanting to see a roadmap for you to go public? I mean, you're already at a Series E stage.
We're focused on building a generational company. That's what's really important to us. We want to change the face of housing and healthcare and want people to look back on it and say, I can't imagine what it was like back when all of these services were so expensive. Why were they like that? And people who are joining want to be part of making that change happen.
How do you calm any anxiety that you're not going to do a windsurf, or you're not going to do suddenly a big purchase where you, as the founder, get lifted, Alexander Wang style, but leave others behind? How do you ensure that this idea that you take the team with you remains resilient?
I think we've been through and through dedicated to the mission of the company, and there's so much more that we all want to be a part of to make this happen. And it's a really exciting journey to be on. We have no plans to do that.
Well, thus far, it seems as though the clients have loved you and speak very highly about the impact that your technology is having, serving people in healthcare, people in housing. Mina Song, founder and CEO of Elise AI, on that fundraise. We congratulate her. And meanwhile, soaring valuations are coming from the likes also of the major foundational models. Think OpenAI, think Anthropic, but also Databricks. They've also been boosting, but they're creating perhaps a bit of a false sense of strength among the VC markets. In reality, only the top 1% of companies are pulling in the majority of capital. And now more investors are beginning to worry about the health of the young Silicon Valley startups. Bloomberg's Kate Clark joins us for more. And really, you've been uncovering, as you always do within tech and venture capital, some of the trends. So these big whopping valuations cover up a darker side?
Yeah, there's a tale of two markets in venture capital right now. You have the AI mega companies, OpenAI, Anthropic, Databricks, raising rounds in what feels like in a monthly cadence. And then you have all of the other startups, and many of them are actually struggling or even raising down rounds.
So who are those types of startups? Because we just had Elise AI on. They've raised 250 million, relatively young startup, and actually managing to, well, raise. But who are those who've been left behind, particularly those perhaps who did well in 2021 and don't really want to admit that they're going to have to face a down round?
I mean, it's exactly companies like that. A lot of the unicorns that were minted in 2021, a lot of the companies that were founded before 2021, the VCs like to call these sort of the non-AI native companies that are maybe trying to catch up, trying to incorporate AI, but really they were born before ChatGPT.
Born before ChatGPT, some of them have made the pivot. Like I think of a Figma, for example, managed to then IPO at a valuation that they were previously going to be bought at. And people have really managed to think of them as a generative AI business, even though they've integrated it as they grew. Where are some of the pitfalls? Where are the industry exposures that we're not liking right now?
I mean, I think you have to look at e-commerce, fintech, cryptocurrency. There are many areas in which investors are not as excited because they don't see how generative AI can really help that business. I think, though, the main point of weakness are the companies that raise at extremely high valuations during the last hype cycle, and investors now just don't see a path to allowing them to raise money at an even higher price. So those companies are kind of becoming what, again, VCs call like zombie unicorns and are just sort of slowly dying.
Will they be allowed to die? Will they be forced to consolidate? What happens, Kate?
I think there'll be some consolidation, but I do think you'll sadly see a lot of just companies quietly disappearing and slowly dying over time. But of course there'll be M&A, and of course there will be winners. There will be companies like Figma and many others that were born pre-ChatGPT and still find success.
And you'll be there to document it all, Kate Clark. We appreciate it. Google, well, it's set to show off new Pixel hardware later today at its Made by Google event. Let's bring in Mandeep Singh, who heads tech research at Bloomberg Intelligence, and talk about, well, how important is the hardware for Alphabet, parent company of Google?
I mean, everyone realizes Google has an advantage on the custom chip side because of their TPUs. I think that's going to show up in repeatedly, like they release Pixel every year, so you will see a much better Pixel version that can run LLMs natively. That's the one thing everyone wants Apple to do. I think Google is already doing that. Obviously, on-device LLMs is not that big of an opportunity right now. But look, whatever people think in terms of AI agents, to me, AI agent opportunity will come through on-device LLMs. And yes, there will be apps that run AI LLMs. Browser is very important. I mean, in the case of Google, they have the Chrome browser.
For now, we know.
For now. and then layering it on operating system I think gives them a unique advantage along with the chips. So that's what I feel they will emphasize at the event.
That this asset is incredibly useful to them and really only useful to them and would wither and die on the vine if sold to another. But compare and contrast how important it is to show off it within their hardware versus, say, a Samsung, which was also infused with Gemini too.
Yeah, and look, Android operating system is used by a lot of other OEMs. So from that perspective, what Google has done well is to showcase AI capabilities on all kinds of hardware. I mean, even the earbuds that they will showcase, I expect, at the event, will have some integration of AI into wearables because that's what they want to show. At the end of the day, your LLMs right now will be distilled into smaller versions that can do intelligent tasks, whether it's scheduling or voice assistance. And that's where Google has a unique advantage because it has the chips, it has the LLM, it has all the data, and it has the family of apps with over 2 billion plus users. And that is why it knows so much that it can do personalized AI that others can't. So to my mind, they're in a unique position. Obviously, they have a small market share when it comes to smartphones, but they're doing enough to showcase that embedded AI element, which could potentially drive up their share when it comes to the hardware side.
Yeah, briefly, how much could they steal from a lackluster Siri offering?
Well, I mean, look, Apple has their problems. They have to figure out a way to integrate LLMs, whether through partnerships or through their own. I think it will be through partnerships. In the case of Google, they will use all the OEMs. So really, the advancements will be at the operating system layer, but they have to showcase that in their own hardware first. So that's why this event is quite important.
So too is as we await in anticipation of Judge Mehta's ruling on whether or not they're able to keep Chrome as well. Bloomberg Intelligence, Mandeep Singh, we love having him as always as we anticipate some of that hardware coming out. But that does it for this edition of Bloomberg Tech. One last check on these markets before we leave, because it's been a volatile hour of trading during this show. We're off by 1.25% on the NASDAQ 100. SOX is feeling the pain. Nvidia is down significantly. We're off by 2% on the semiconductor index. Crypto, though, turning back into the red. There is risk and anxiety building about some of the valuations in the market. We see some profit taking. Don't forget, though, to check out our podcast. You can find it on the terminal as well as you do online on Apple, Spotify, and iHeart. From New York, this is Bloomberg Tech.